Good afternoon, everybody. Uneducated economist here. So it's Sunday afternoon. Things are very strange. There's a very weird aura about people. Everybody's talking the virus. Everybody's getting prepared, buying up the toilet paper. This week is going to be an interesting one. There is a lot of store closures. I'm reading articles about how Nike, Verizon, Patagonia, a lot of store closures. People are going to shut down shop for a little while. I was reading articles about how Hoboken, New Jersey, they have a curfew installed. People can't go out of their house between 10 p.m. and 5 a.m. Things are going to get very strange around here if the service industries shut down. If bars shut down, restaurants shut down, all the clubs, all the theaters, it's going to be for some very interesting times. Most of America, I wouldn't say most, but what was it, 40%? I forget what the statistics were. 40% of Americans couldn't come up with $400 in case of an emergency. That leaves them with just a few days of being out of work. If they're out of work for just a few days, they're going to go into some financial trouble. This is going to create some issues. And I can only assume that it will spark off in a recession. It's definitely heading towards a global recession right now. And if we use Italy and Spain as kind of the indicators of what the rest of the world is going to do, there's going to be some serious hard times coming up. I was reading an article, and I'll leave links down in the description for all this stuff, guys. But I was reading an article coming out of Manhattan, I believe it was, where there's a run on $100 bills, where the depositors, the people who have money in the bank, are pulling out cash and lots of it. This is the liquidity that the banks need in order to function, or at least to be profitable. They don't loan out your money. I won't get into it, but if they lose their depositors, the banks are going to have a hard time being profitable. And this is one of the things that the Trump administration is really pushing for, is for the Federal Reserve to print up a lot of money. Print up a lot of money and start buying them treasuries. It's obvious now that the corporate debt bonds, the corporate debts, they're going to have a heck of a time here when it comes to their bonds and rolling their bonds over into new bonds or paying off the bondholders. When you got like the airlines parking planes, flying with hardly anybody on them, if anybody on them at all, ghost flights. I don't see how this could not possibly lead into a recession. We had mortgage rates kicking up a little bit. And the major reason for it is the mortgage-backed securities. And we talked a little bit about it, but really what's happening there, to kind of go in a little bit more depth on that, is that when mortgage-backed securities are paid off, they roll over into new mortgage-backed securities. So when you refinance your home, or a home is refinanced, a mortgage is refinanced, it pays off the old loan and then reestablishes a new one. So the investors who had purchased those mortgage-backed securities that got refinanced, they're made whole again. And then it's up to them to repurchase the mortgage-backed securities again. And when we saw the major refinancing take place the other day, when the interest rates dropped so much, the investors were not there. They did not come back into the market like they typically had been. So if you can imagine a bank trying to sell mortgage-backed securities And all of a sudden, they have a flood of refinancing taking place, and they have to reestablish new mortgage-backed securities, and the investors don't come to buy those things. Now they have a flood of mortgage-backed securities to sell. And just like anything, supply and demand. If there is a lot of supply of these things and the demand is down, then the prices start to drop. And just like any bond, when the prices drop, the interest rates rise. So that's why we're seeing a big, well, it's not that big, but that's why we're seeing the mortgage rates starting to rise, is the investors are not there to pick up the mortgage-backed securities after the refinancing took place. Banks don't want to hold your house loan. There's not enough money in it for them, but they do want to sell that mortgage-backed security. You know, a lot of people are talking about silver too. You want to kind of give me a hard time about the price of silver dropping. But I don't know if a lot of you know about the paper manipulation that takes place in silver. And to kind of put a long story short, because there's plenty of videos out there that'll really go into depth about the paper manipulation on silver. But there is well over 100 ounces of paper silver for every ounce of physical silver there is. And when investors are getting into cash like they are now, see, investors are dumping everything they got. It doesn't matter what it is. They're getting out of their investments and getting into cash. And silver's no different. They're dumping that paper silver. And when they start dumping that paper silver, it starts dropping the price. And it starts affecting the spot price of the physical. Go to some of the online dealers and look what's available. Hardly anything. They have the expensive stuff for sale, the stuff with high premiums, and even the ones that they're advertising 79 cents over spot price, you have to buy 500 ounces. You know, I'm sure there is a few dealers out there if you can find the deals, but for the most part, the premiums are up very high on silver right now. So to take advantage of the low spot price, I don't know where they're at. I looked. You know, you go to buy 10 ounces and you end up paying $18 an ounce for it. By the time you get it shipped to you, or if you use a credit card, if you're buying, you know, just a small amount. And this is one of the things that we saw back, you know, prior to the big run-up, is that when the prices drop, the premiums go up. You know, a lot of people talk about mining costs. Silver's a byproduct of other mining. There's hardly any primary silver mines out there. I mean, don't get me wrong, there are primary silver mines. But as far as the majority of silver, it's a byproduct of copper mining or gold mining or, you know, lead mining, nickel mining. Silver's a byproduct. It's just something that the miners do because it's just part of the system. But it's one of the most vital commodities out there to our livelihood. It's in all electronics. It's going into the medical field. You know, look at the demand. Here's another one. I'll leave the articles for this one too. Look at the demand for silver coming out of the U.S. Mint. In February, compared to March, it has grown by many folds. People are getting into silver. You know, I talk with a lot of people out there about how they're prepping and how they're getting ready. And it seems to me that a lot of people do not recognize how bad it could get. That if the supply chain shuts down, the chances of them being able to go down to the grocery store and just purchase whatever they want shrinks. You see it in TP right now, you see it in the toilet paper, but can you imagine when it comes down to the meat, the poultry, the beef, the pork? I was watching an Instagram video from a friend down in California. And she said that she couldn't find any meat at the grocery store. She had to go to 3 different grocery stores before she was able to find the meat that she wanted. She said, what am I going to do with ground turkey? You know, and I think if you can find ground turkey and you can't find anything else, I would buy that ground turkey if I were you and throw it in the freezer. Rice and beans, if you notice it, starting to clear off the shelf. Same thing with oats. It's one of the things that I told you guys about in the prepping video that I put out a couple of weeks ago. And I said, your time to prepare is gone. I said, go out there and buy a bag of rice, beans, and oats. Now go try and find it. It's starting to get difficult. You know, this just-in-time for delivery sales that we have in this country is going to be a major problem when the supply chain shuts down. Nobody has stock. Nobody has stocked up on a month's supply. You know, it's going to come down to the liquidity in the banks. See, the banks have a lot of reserves, but they're all in U.S. Treasuries. And when it comes time to loaning out cash, they're going to find themselves in a difficult position. That's one of the reasons why you see the Fed stepping up with the repo, up to $1 trillion, is to try and keep the cash in the system as people are pulling it out. As people are cashing in their stocks and everything else to try and get a hold of the cash, it's pulling a drain on the banking system. It's pulling the liquidity out. And a major problem with this is the shadow banking system. See, the shadow banking system provided a lot of liquidity to the whole system. As investors were investing in mortgage-backed securities or whatever it is that the shadow banking system was selling, and all of a sudden those guys disappear, now it's up to the traditional banking system to provide the liquidity, and there's just not enough of it. Same thing with the rest of the world. A lot of people don't know this about the shadow currency that the worlds use, where they make promises in US dollar. And those contracts that they're promising, they're sold off as if they're US dollars. But then one day somebody wants to get paid, or everybody wants to start getting paid, and there's a huge drawdown in the liquidity, in the cash. And there's just simply not enough of it. You know, it's not just about destroying the system. It's about trying to maintain the system. And when that draw for liquidity really ramps up and there's not enough of it out there, cash becomes king. And having cash is the most important thing when it comes down to going to the grocery store to buy something, when it comes to making a private sale, when it comes to having it in your pocket as opposed to in an institution or in a portfolio. You know, I heard people talking about their retirement and how they lost $20,000 in the last few weeks. And I'm thinking, you're going to lose a lot more if you don't cash it out. And they'll say, well, we'll just ride it out. Yeah. Do you have the time to do that? Are you willing to take the loss? Watching that number drop. Until then, I'm not telling people what to do. I'm just saying, are you willing to do that? Because that's what it's going to take as this drawdown in liquidity takes place, as everybody's trying to get their hands on the cash. I personally, what I'm doing is I'm taking my little bit of money that I have and I'm buying canning supplies. See, I have enough food to go for a few weeks. I have enough food for my family. But if the power goes out, if the water stops flowing, are you guys prepared for that? See, if the power goes out and I have a freezer full of food, what are you going to do with that? You can cook it all up, but then how long is it going to last? You have to be able to can it and preserve that food. So canning supplies are going to be a necessity if it gets really bad. Energy companies are going bankrupt. They're going to go bankrupt if this continues. Go and look at some of the bonds for energy companies right now. The yields on them are rising very fast. It's because nobody wants their bonds. Nobody trusts that the energy companies are going to continue with the pace that they're going. This stuff isn't going to switch around in a week. This virus isn't going to go away in a week and everybody's going to go back to work. Schools are shutting down. Institutions are shutting down. Stores are closing. Restaurants are closing. When people say now's the time to buy stock, I don't think so. It could be. I mean, what do I know? I don't have any money. I don't have money in the stock market. I have a little bit, but not enough that if it crashes, I'm gonna lose, my livelihood or lose my retirement. I'm not worried about anything like that. I keep an eye on the traffic. I have a major road right in front of my where I work. And I'm just watching the traffic go by, and I can tell that there has been a drop in the amount of people driving. We're like a vacation destination. People come here for the weekends, and there's not as many people traveling. And when people don't come here, they don't spend money. And if they're not spending money, our businesses suffer. Yeah, we're coming into some very interesting times here, guys. Very interesting. So I hope you guys are staying safe. I hope you guys are preparing mentally, physically, financially. If you can find the staples out there. If you can find the rice and beans and peanut butter and bread and flour and sugar, you don't have to hoard up on that stuff, but I would get some. I would get some so you have it. Get enough that it will last you a few weeks. Because if you go unemployed and you're relying on unemployment insurance, which isn't going to pay you as much as you're probably getting paid, you got to be able to make your rent. You got to be able to pay the power bill. I think about the guys who are severely in debt, who spend their entire paycheck on making their debt payments so that they have a car and a house and credit card payments and their student loans and all the other stuff that goes with it. And it just it boggles me to think, man, what would I do if I was in that situation? Yeah. We're coming into some very interesting times here, guys. And we're going to find out a little bit more here towards the end of the evening when the futures market starts opening up, and we're going to find out what the bond market's doing. Find out what the Dow futures are going to be like. Because I cannot imagine with these stores talking about shutting down and cutting back hours, the layoffs are going to come. The layoffs are right around the corner if that continues. I don't know how long these companies can operate with 2 weeks of shutdown. But I can't imagine that they have a contingency plan that's going to last them 2 weeks. That they can pay all the employees for not working. Maybe. I mean, I know a lot of them are pretty rich. But those rich people, they want to stay rich. They don't want to give it all up. And that's probably one of the reasons why they're shutting their stores down, because they know nobody's going to go shopping. I used to put these videos out just to try and be informative of, different economic situations and, trying to discuss, how the banking systems operate and stuff like that. But now we're coming into the Black Swan event. We knew that there was going to come a time where there was going to be something that hits the economy that's going to slow us down. And here it is. It's starting to happen. The damage that is going to be done from this is going to take a long time to repair. A lot of people talk about the 1987 crash. I did a video on the 1987 crash a while back. There was no real economic event that took place that caused that. It was all of a sudden people started selling and they realized that there was a sell going on and everybody panicked and sold out and it dropped the market. We have a serious event taking place right now. Whether man-made or not, whether perpetrated by the media or not, it's taken place. I'll see if I can't do some canning videos for you guys. My wife, we used to can a lot of stuff. We used to can a lot of fish. I used to raise a lot of birds, a lot of chicken. So, she knows a lot about canning. And I got some canning supplies, and maybe we'll do some canning videos for you guys and show you how that goes. And if you don't know how to can, maybe you should learn. Get a pressure cooker. Get some jars and lids and rings. And learn how to can. Because at some point, if the supply chain breaks down and you can't go get food, you're going to need to know how to preserve food for the long run. A great YouTuber out there, if you get the chance to go watch him, is Alaska Prepper. He has a great channel about prepping. And he's a really nice guy too. I love his videos. I love watching them. All right, guys. I'll leave links down in the description for you guys. Uneducated economist. You let me know.